Let's now move on and let's welcome on board the management of JB Chemicals. We have with us Nikhil Chopra joining in right now on the show. Nikhil, hi, just evaluating your quarterly performance, and I guess it was largely impacted by the revenue deferment adjustment that you've made, in the base quarter. Walk us through how the domestic performance in particular has been and what really is the outlook for the international business as well.
So, if we look at our quarter three results, uh, it reflects strong business momentum in a macroeconomic environment which has been challenging. If I have to start with that, and equally, if we have to talk about India business, which contributes 50% to our overall revenue, which is now close to 600 crores every quarter, we continue to outpace the market. If you look at quarter three, as reported by IMS IQVIA, we grew at 27% as compared to market growth of 10%. And if you look at May-December, we were the fastest growing company in top 30 with 27% growth as compared to market growth of 18%. Now, this has happened because of some 3-4 big levers. If I have to share the entire thesis of making big brands bigger, which we continue to do. Our Rantex, Cilacar, Nicardia, Metrogyl, which contribute 70% to our business. Our new introductions in India business have started contributing in a big way, which is contributing close to 4%. That is helping us. And a lot of process and systems that we have strengthened in India business and operational efficiency is overall helping us to deliver market beating growth in India business.
Sure, understand that. Just looking at your performance as well in the quarter gone by, and I can see that your margins have come in at 66% in the current quarter. However, we understand that there's been an impact because of higher API raw material pricing as well and supply chain issues. Just walk us through as to what stage you're currently at and when is it that you see these issues getting resolved?
See, we all should agree that there are headwinds in the business with the input cost, freight cost, gas cost, everything going up and touching new peak. And within that gambit also, we are able to maintain gross margin close to 66%, which is helping us to drive around 26-27% EBITDA margin. If right now, the way we are staged, I think in next couple of quarters, we don't see any relief coming. That is what I can say at this moment of time. So the only lever that we have in our hand is look at how do we deliver better growth, because demand is there. That is a good sign. And equally, continue to drive better efficiency across the company. Look at how do you enhance the productivity. That is what I think many companies across sectors have been trying to do, and that is what game plan we also have in the coming time. And equally, what also we are happy to share that what we have acquired as an inorganic asset in the form of Senzyme in the month of Feb is also one of the lever that we have in terms of how we can leverage and look at, because India business overall is delivering a market beating performance, and with its Senzyme coming in today, we are in top 25 as compared to in October 2020 when I joined, we were 32nd ranked company. Today we are 25th ranked company, and overall with the organic growth and with inorganic asset coming in, at least what we can guide at this moment of time that we'll continue to deliver market beating growth and serve more and more number of people and consumers in India business with our existing portfolio and the new offerings.
Right. Good morning then, Mr. Chopra. Just wanted to, probe a little bit more about what my colleague was talking about. You just said that if there is no relief in the next quarter, then does that mean that you won't be able to maintain the 66% margin that you have currently clocked in? What is the trajectory that you're looking at if there is not going to be any relief in the coming quarters? How much lower will the margins be?
So we will be what I commented. We will be able to maintain 66% margin. Will not be able to improve on that. That is what I shared. So 66% margin where we stand, I think we'll be able to maintain that margin, and equally that will help us to drive the EBITDA margin close to 26-27%, which we have guided. That is what I see in next couple of quarters.
So continuing to remain optimistic on the margin front, you spoke about the acquisition as well as Sanzyme. And I wanted to understand, apart from that being one of your key growth levers, you've also been the fastest growing pharma company in CY21, as you just spoke of. You've outpaced the industry average, which stood at 18%. So what does this mean in terms of growth in your market share going forward? And what are going to be some of the other key growth levers?
So if you look at what we are trying to do in India business with the acquisition of Sanzyme, now we are in top 25 ranked company and fastest growing company. So we'll continue to drive efficiency, we'll continue to drive productivity, we will continue to look at the entire concept what I spoke of, making big brands bigger, look at how we can leverage with our new introductions that we have put in the market. The new go-to-market model that we have put in place when the new management come in has helped us in terms of where we stand today. So that is where we stand if I have to talk about the growth levers. Equally the way we have been working, because this is 50% of our business. 50% of our business comes from international markets. There we see the demand coming back in the world of branded generic market, where we are present in Sub-Saharan Africa, Latin America, Southeast Asia, and Middle East. And equally, we have a significant proportion of business in the world of contract manufacturing, particularly for our lozenges business, where also we see, particularly for cough and cold, the demand has bounced back. And also we are very happy to share that we have added a couple of new partners in terms of our offering in the world of CMO businesses for lozenges. And also we are working on some new novel concepts outside the world of cough and cold, particularly for immunity, motion sickness, sleep disorders, sexual wellness. So these are some novel concepts, drug delivery in the form of lozenges, which are more consumer friendly. That is what we have been working. So we see multiple levers in terms of demand coming back in a big way in our branded generic market. Equally the work that we are doing in the world of contract manufacturing for lozenges, and our home markets outside India, Russia and South Africa, have also delivered a fantastic Q3, and the order book what we see for Q4 and Q1 also look robust. So these are the levers in terms of where we stand. So we continue to look at least delivering market beating growth in the geographies where we are present. We continue to look at how do we make this company future ready by launching progressive products, not only in India, but also outside India, and look at how do we serve more and more number of consumers and patients, be it in the form of lozenges that we want to, as a therapeutic segment that we want to enhance, or the new drug offerings that we are putting in India.
Good morning, Mr. Chopra. This is Nayantara also that's coming in for the interview. Now, if you were to look at calendar year 2021, your company has been one of the fastest growing pharmaceutical companies. You've outpaced the industry average that stood at about 18%. How has the market share gain been, and how are you going to maintain this edge?
So market share, if you look at with the Sanzyme entity now coming in, our market share is close to now 0.8, 0.9%. That is where we stand. And what we fundamentally believe in terms of strengthening the basics on the ground, off the ground, people who are working in head office, how do we help our teams on the ground to do better show in the clinic when they meet healthcare professionals. And as we have expanded our portfolio offering for the healthcare professionals in India, be it in the form of cardiometabolic, be it in the form of gastroenterology, nephrology. So we will continue to outpace market with a significant difference in terms of what we will be reporting in the coming quarters. That is what we have been confident, because the levers that we have put in place in terms of when we look at per person productivity for India business today stands to 5.5 lakh rupees per person. And we look at this productivity can easily grow at 12 to 14% in next 18 to 24 months without adding any feet on the ground. So we don't only believe in bringing top line growth, which is market beating, but also what we believe in growth, which is more profitable. So new introductions, strengthening basics, making big brands bigger, integration of Sanzyme business, where we see better life cycle management, synergies in distribution footprint, equally looking at what more we can do in terms of prescriber-based synergy. So these are the levers that we are confident of in terms of where we want to make our headway in India business and continue to outpace market and at least gain market share. Though we are not 1% plus market share. We are 0.8, 0.9% market share. But at some given time, the journey that we have traveled from October 2020 from 32nd rank company to today now 25th rank company, Our ambition is that how at least in next 2 to 3 years, we become player in top 20.
And to keep this edge and for all the plans that you've talked about and under the various categories as well, what kind of a capex cycle will we see being undertaken by the company? How's the capacity utilization also going?
So our capacity utilization is close to 60 to 70%. Our capex spend at our manufacturing plant is close to 60 to 70 crores, which will continue to be there. Our R&D spends are going to inch up, which are going to grow at 30 to 40%, but still our R&D spends are close to 1.5 to 2%. And these R&D spends are more towards in terms of what I shared earlier in terms of launching new products in our markets outside India. Also look at filing more number of ANDAs in US market. Our run rate of filing in ANDAs in US market has been 1 to 2 historically. Going ahead in next couple of years, we will see our ANDAs filing close to 4 to 5 products, which is low volume, high value, and niche competition. So our R&D spends are going to grow at around 30 to 40%. So all put together, our capex would be close to 100 crores, which has been historically around 80 crores.
Okay, so let's see how all of this pans out. Mr. Chopra, thanks so much for joining us here live on the market as JB Chemicals for you, one of the fastest growing pharmaceutical companies of 2021.